I've got a video here that is will talk about a red spike, and it also happens to be in a sub penny stock, and I wanted to just kind of do a few of these so that it shows you that these things will work high or low. There are a few differences in the visibility of the charts, and the two vertical lines that I have drawn in on the two respective charts are of a red spike, which by definition is a zip red down and a zip yellow down. The zip yellow below 50 and the zip red below 50 and the zip yellow above 50. This has some powerful situations in it, in that zip red is now at 4, and yesterday zip red is at 70. So it's also almost in that 70 category, which tells us that it should respond well and go back up. Because again, if you haven't heard me talk about it, zip red moves when it moves in the 50 range or the 70 range or the 90 range, it does things. Typically, I should say obviously there's conditions, but oftentimes when zip red moves 90 plus points in one day, the next day it will go down, but the price remains the same or goes up. When zip red moves 50 points, it's typically a real nice reaction, reversal reaction. If it's a spike down, it reverses and goes back up, and if it's a spike up, if it's a red peak, then it spikes up, and if it's 50 points, it usually reverses nice. In this case here, the price did not move in the right direction. And if you haven't seen it yet, the number one reason is Zip Zion is in its highest position, and Zip Zion tells us that the position is going to, when it's highest, Zip Zion tells us that the price goes down, at least the next day, and it usually goes down until it disappears underneath the lines of a candle. Disappears underneath the other zip lines. Now, in this particular case, we have a red spike that's really strong going down, and it's right after a really strong peak of 3 green candles. And so we always take into consideration a little bit of what is moving behind us. The other thing I forgot to point out, on your pink vertical line here, zip yellow is at 53, and that's like a double within a double pattern. Zip yellow is that's close enough for qualifying for a down touch on the zip 50 line, and so that says even more so that the power of this inside this should react up the next day. And in fact, it gaps up a little bit next day and then goes down significantly, hits the 200 moving average, and comes back up, but remains a red candle the next day. And so, and it might have been here on the pink vertical line day, the price. It ended up at 0.0075. The next day, the price ended up at 0.0075. So you can see, we're below a penny in this thing. I'm not sure why it even trades, but I happened to find it because I accidentally punched in the wrong buttons for Microsoft, And this example is MFST. And so I just thought I'd share with you as long as I was underneath a penny stock. The other thing that happens down here is I'll show you in the power chart. When you're under, I'm not sure exactly where it is, but under $1 or there's at some point the power red lines just are disproportionately out of whack compared with the other lines in the system. It always happens in the under 50 cents, but it can be fairly strong even above that, up to maybe $2 or $3. And then it goes back down into some normal ranges, I guess is the way to describe it. But that's what power red looks like in penny stocks. So just be aware of that. But the other thing I'll point out here in the trend chart, on this day right here, trend red was in its second day going down. It had crossed under trend green, which tells us that we're going into a downtrend. And so it's hard to, let me say this, it is difficult sometimes to trade with sensitive indicators when you may not be knowledgeable about what particular pattern or what other line could have more influence than other lines. And sometimes they're in positions that you need to be aware of as well. Also, when you're trading after a peak, it's logically going to continue down in this example, especially when we had the swing Zion real high like we saw it before. Because I forgot to point out a couple of things, and that is on the day after this vertical pink line, swing Zion crossed under 0, and that should tell you a lot, because swing Zion is a price barometer, and now we're under 0. Okay, but much more powerful than that, than even swing Zion, is power red. And if you look over here on the vertical line, power red is now under 0. And power red is our #1 position indicator that tells us about price in its relation to being under or over 0. So the easiest way to describe it is that you've got some significant mixed indicators here, and really there's no point in trading on a day like this, because you can find a lot of days that have indicators that are not mixed. So this is a good example of dealing with a penny stock, and also in showing you reactions to your indicators. And the other thing too, just like some patterns work better in some particular stocks, when you're getting down real low, like we're under a penny here, we're 3/4 cent. This is very low. When you're down there, first of all, you question why you're there, but also indicators. I haven't spent a lot of time down here in penny stocks, so I don't have huge amounts of information, other than I know that the reaction of indicators can be a little, I'll just use the word stunted, or can be different in a little way. I mean, normally you don't have any problems, but it's, you know, you just have to kind of play with it and be aware of what moves indicators when you're under a penny or under 5 cents or whatever, if in fact you trade that type of product. But all in all, they'll tell you what's going on. Even down here, we had the mixed indicators, and for me, that's a classic sign of why bother trading it. You know, you don't need to do that. There are so many good choices out there. You really don't need to do it. But so much for that one. We will see you on the next video.